Hey everybody, Rob Maurer here, and today we are going to be talking about a couple more leaked emails from Elon over the weekend. We've also got news on the 4680 battery cell production, more news on Tesla factories, the general markets, of course, with the tough day in the markets today, and a few other items as well. We'll start with the markets. Obviously, Tesla down 7% today, 7.1%, closing at $647.21, down about $50 per share, following the NASDAQ, which was down 4.7%. So with Tesla's beta, kind of what you would expect for the day from Tesla, and certainly a number of other stocks faring in this same sort of ballpark. Definitely not the most fun environment. As we can see here, we're breaking out our worst performances of the last 2 years chart, and this is the fourth worst day for the NASDAQ in the last 2 years, and you can see these other teal highlights on here. Five of the worst 6 days in the last 2 years have come in the last 2 months. So definitely been rough, and that has continued. And just for context, here is the worst days of the last 5 years. So I know no one really likes looking at those charts. I don't either, but it is definitely helpful context, especially when we think about Tesla's individual movement there as well. Of course, as we have talked about, a pretty big week this week. Tomorrow we will have the producer price index published. So that'll be the counterpart to the CPI that we talked about on Friday. It looks like the forecast right now is for a 0.8% increase. That would be month over month. So we'll see how that comes in. And then, of course, on Wednesday, what everyone's watching for this week, the FOMC meeting and the interest rate decision. So that'll be a couple hours before market close on Wednesday, and we'll be largely determining where things go from here. The Wall Street Journal today put out a headline that said that they are expecting, Wall Street Journal says that Fed is likely to consider 0.7% or 0.75% point rate rise this week. So as the Fed had previously said, that's not really what they're considering. But of course, with inflation coming in higher than expected, those expectations for interest rate increases have increased accordingly. So the Wall Street Journal article, pretty long here, but points out how this morning, Barclays and Jefferies, or I guess on Friday, had said that they expected the Fed to raise by 0.75%. And then today, JP Morgan, Goldman Sachs, and other analysts also increased their forecast to this level as well. So that definitely playing a part in what we're seeing in the market today. So hopefully, if we do see that sort of an increase, some of that might be priced in at this point. Obviously, expectations take a little bit to rise and fully be processed, but definitely trending more in that direction in terms of the expectations. So that's the general market stuff that we got going on. We do have more news here from Elon, or more leaked emails here from Elon, rather. He sent out an email, I believe Saturday, I think Drive Tesla Canada first covering this, to all staff titled Production and Delivery. And we'll take a look at these emails. There were two sent in sequence. So the first one was kind of on the bottom here. Elon said to everyone, "This has been a very tough quarter, primarily due to supply chain and production challenges in China. So we need to rally hard to recover. I'd like to congratulate the Fremont team for achieving an all-time record production day last week, and Berlin for making almost 1,000 cars last week. This is great stuff. Shanghai is returning to full strength, and Austin is spooling up, onward to victory." Elon then followed that up, I believe the following morning, saying that we actually build great, real products that people love and make their lives and the world better. That is so profound. It is an honest day's work that you can feel in your heart. Whatever else is going on in this messed up world, know that at least what you are doing is pure goodness, and that I have infinitely more respect and admiration for you than the richest person on Wall Street, which is definitely a nice message to hear for employees. I think what we want to focus in on here, though, is this record production from Fremont and the Berlin production rate, which we do actually have a little bit of news on Berlin as well. I'll talk about here in a second. But first, Fremont achieving record production. That really is what the expectations are at this point. You got to remember that we have Model S and X continuing to ramp. So with Tesla continuing to add that back into production on top of Model 3 and Model Y, we should be expecting each quarter to be a record, which of course would then correlate with presumably all-time record production days. So it is good to see that, but doesn't necessarily mean a whole lot in terms of what the quarter might shake out to be. As for Berlin making almost 1,000 cars last week, that's good. That is exciting at this point in time. As Tesla has added a second shift, hopefully we can see that ramp up beyond that level pretty soon. Remember, 1,000 cars per week would be maximum 13,000 per quarter, and Tesla is not at that level yet. So if we're thinking about Q2, sorry, I lose my voice a little bit here. If we're thinking a little bit about Q2, we might, best case see Berlin, if they can continue to ramp up even beyond this. Best case talking here, maybe somewhere around 10,000 cars for the quarter. But again, it really depends on how much they can do in these last couple of weeks. So we'll walk through that, of course, as we get closer to quarter end. We get a little bit more information on that, but it is good to see Berlin ramping. And then, of course, he says Austin is spooling up. So we can take from that Austin, as expected, is a little bit behind where Giga Berlin is at this point. And we do have a little bit more information on that as well. All right, so on Berlin, we had a report from Reuters today that Tesla is hiring 500 to 600 new staff per month, and that total staff has now risen to about 4,500 at the factory. I think we've kind of been following that, so no big surprises there. But we do also get confirmation here from comments by Jörg Steinbach, the economic minister there, that Tesla has been running on 2 shifts, as I just mentioned, as of, sorry, I don't know what's going on with my voice today, as of May 23rd. So good to have that confirmation about that second shift. And they do say that Tesla is scheduled to start a 3rd shift before the end of the year. So again, 2 shifts, 1,000 vehicles per day. And hopefully with that second shift, it can continue to ramp up pretty significantly from there. And we know they're using 2170s at Berlin, which Tesla has said aren't really constrained. So hopefully, once supply chain concerns ease in other areas like semiconductors, Tesla should be good. They should have plenty of parts, though, with how much, we have seen, or plenty of batteries with the shutdown time that we have seen in Shanghai. I'm going to take a drink of water so you guys don't have to listen to me sound like this. All right, sorry about that. So as we had talked about last week, Tesla had expanded the order or design studio for Model Y to Australia, New Zealand, Singapore, and Japan. We've got some reports now out of Australia that Tesla has already extended the wait time, so the estimated delivery time, out to February to May for 2023. Originally, I think it was slated for late in Q3, early Q4, that window. So just in a couple of days here, Tesla has received significant number of orders. Elon said that they didn't expect demand to be so high with that expansion, and that they're working on accelerating right-hand drive Model Y production. So it's good to see that. What I've heard just from somebody that had talked to a store employee in Australia was that Tesla had already generated about 10,000 orders just since opening up the design studio in a day or two there. So as we can see with the wait times, it looks like Tesla's, plenty of demand in those areas, which is exciting to see. All right, the other news here we've got is on 4680s. So Dylan Loomis of the Electrified channel got some inside information just on the production rate for 4680s. And apparently Tesla right now is currently manufacturing somewhere around 1 million 4680 cells per month. So we had previously talked about how Tesla had manufactured at Cato Road, which, remember, that's their pilot plant in California, their 1 millionth 4680 cell in January. So that was life to date at that point in time. And now Tesla is hitting 1 million per month in Texas. Or I believe this would be in Texas, I guess. That's not entirely clear, but I guess that was my assumption when I walked through it, or when I when I listened to the video here. So if they are at 1 million per month, that would be significant progress from where they were, even just a few months ago. However, maybe not quite up to what Tesla had expected according to this video, and maybe not quite to what we had hoped for at this point. That'd be enough for maybe 1,000 to 1,500 vehicles per month, which of course would put Tesla a reasonable amount behind where Giga Berlin would be at, but still on the early part of that S-curve, and hopefully continuing to ramp significantly from there. The other parts of this video just mentioned that Tesla at some point is planning to, it was referred to as retooling to build in the 2170 capabilities at Giga Texas. That's not really news because we had heard Tesla talk about that on the Q1 earnings call. So that is part of the plans. Tesla has already mentioned that, and it doesn't necessarily mean that they're doing a complete retooling away from 4680s or anything like that. Just that they're planning to build in the capability for 2170 cells in Fremont. Whew, really sorry about my voice today, guys. Just a couple more live streams this week, and then we'll have some of the editing back. So that'll be good. The other thing from this is that the 4680 packs are confirmed to be structural, and the charging curve is confirmed to be software limited at this point. So not the actual range or energy available in the vehicle being software limited, but the charging curve that we had talked about with supercharging. We talked about that. All right, so more news here on the 4680s. LG Energy Solutions today announced that they are planning to invest about $450 million in the production of 4680s. So they expect to add 9 gigawatt hours of production capacity. And they're also announcing an expansion for their 2170 capacity for an additional 4 gigawatt hours worth of 2170s. So sounds like a pretty big monetary investment. However, the capacity that they're expecting to get out of this isn't really all that significant. 9 gigawatt hours is a decent amount, but probably only enough for around 125,000 vehicles, of course, depending on pack size. As far as the timeline here, I didn't really see anything too concrete for LG, but it is good to see that they're preparing to step up and get to that volume production with 4680s. All right, next report here we have is from Electrek. So they are saying that Tesla is considering sites for a new factory in Canada and Mexico, in addition to scouting locations in the United States. So earlier this year, we heard Elon mention that they are looking for new factories. Somebody asked about this on the all hands meeting last week. So Electrek, as we had talked about, had obtained a recording of that. They've been slowly leaking out little details from that meeting. And here we've got more on the factory. So looking at sites more broadly in North America, so including Canada and Mexico and the US as well. But Elon did say that the priority right now is definitely getting Giga Texas up to volume production. And it's difficult to get to volume production, but that's much more important than finding new sites. All that being said, they are still looking. So I think Tesla had previously said that they would announce new factory locations later this year. So plans may have changed just given the macroeconomy, but that's what we know for now. Tesla is still looking. All right, next today, didn't really help out the stock, but we did get an upgrade from RBC. So they have decreased their price target on Tesla rather from $1,175 to $1,100 per share. However, with the current share price sitting at $650, they have upgraded their rating to outperform, which generally carries a little bit more weight in terms of the client list, in terms of the interpretation from their client list than the price target might. So man, this is not going well today. Sorry guys, thanks for bearing with me through it though. Just a few items left. So with this RBC note, they have lowered their delivery expectations to 249,000 vehicles. He notes that the current consensus is 279,000 vehicles, but that's not updated because some analysts just haven't updated their forecast for a while. Obviously, earlier in the quarter, we thought Tesla had more potential before those Shanghai shutdowns. So that'll get factored in the closer we get to the delivery report and, of course, earnings. But right now, he says that buy-side estimates are at around 250,000. So that's kind of where consensus is coalescing right now, despite not being updated in, FactSet or Bloomberg Terminal or thereabouts. So interesting to see that. That's, I'm in that same ballpark too. Production a little bit higher than that, hopefully. But Tesla's been draining inventory. So, 250,000 deliveries definitely wouldn't be too surprising to me. Anyway, he does note that as they look to the second half of the year, there could be some margin upside versus what consensus is. So they're expecting somewhere north of 30%, which is where Tesla has started to trend to here in Q4 and Q1. But the consensus is for margins to fall as people are expecting Tesla's cost of goods sold to increase, both from raw materials and from the ramps of Berlin and Texas. But RBC here, more positive, as am I, on gross margins for the rest of the year. And they also say that, quote, while Tesla is fairly secretive about the deals that they have cut for supply of raw materials, and talking to contacts, we believe they have done more than other OEMs. The company's early focus on vertical integration, not just batteries/raw materials, but also motors, semi-software, is likely to pay off, end quote. So that's definitely, more along the lines of my thinking. We showed that chart from UBS last week that showed their expectations for cost of goods sold increases from raw materials, and it was on the order of, $3,500–$4,000 versus the price increases we have seen from Tesla, at least in North America, have significantly outpaced that level. So as long as the ramp costs aren't too significant for Berlin and Texas dragging on gross margin, we definitely should see some upside there. All right, next up. So while the markets are tanking, Bitcoin is tanking too. I think it's down another $1,000 since I did my math for this episode. But as we know, whenever Bitcoin hits a new low, Tesla is going to have to mark an impairment on their income statement for accounting for that loss. Even if Bitcoin does return to higher values later this quarter, Tesla has to mark the carrying value lower to align with those low prices. So with Bitcoin now trading towards $22,000, we are looking at a pretty significant loss here for Tesla, unless they happen to sell, which it wouldn't be too shocking if they did, especially given Elon's comments about, the macro environment. If Tesla had gotten out of that position to just have a little bit more cash on their balance sheet, I wouldn't be terribly surprised. But assuming they didn't take any action, then right now, as of last quarter, Tesla had marked the carrying value at $1.26 billion. So Tesla's got a little bit less than 42,000 Bitcoin. If we're now at, 22,000, again, this has changed since I started doing the episode, we'd be looking at a little bit over a $300 million loss in the carrying value. So that goes right into Tesla's operating expenses, that $300 million loss with Bitcoin's current price. It'll depend, how this continues and looks through the rest of the quarter, but that's kind of what I'm expecting at this point. Kind of at least a $300 million loss. And then of course, you also have some restructuring charges from Tesla's layoffs that are likely to hit this quarter too. That could be another $50, $100 million or so this quarter. So it is going to be, piling on to an already tough quarter. And of course, we'll go through those results as we get closer to quarter end. And things could continue to deteriorate in the Bitcoin price. So that's just a number, a moment in time right now. That definitely could get worse. So definitely something to keep in mind. Again, that doesn't necessarily mean a whole lot if the value of Bitcoin does return. Tesla will still have to mark that down, even though their actual value of their asset would be higher at that time. All right, last couple of items here. We've got news from Electrek here also today that Tesla is launching a virtual power plant pilot project in Texas. So like we have seen them do in California, of course, Tesla's not actually allowed to sell back the energy from Powerwalls yet. So this is just kind of a very small pilot project to demonstrate to ERCOT the value that this could provide to the Texas grid. So Tesla basically just offering right now I believe a $40 gift card for those that are participating. But of course, that requires those participants to allow Tesla to have control of 80% capacity of their Powerwalls. Basically, Tesla just saying that they won't draw below 20% of the capacity. So it's not the most economically attractive proposition for those Powerwall owners in Texas, but of course, hopefully good for the cause in terms of making this a viable option for the Texas grid. So Tesla just, encouraging people in a small way to hopefully be a part of that pilot project, and we'll see where that goes. And then last couple of items for today, there is news that the CEOs of General Motors, Ford, Chrysler, and Toyota have been urging Congress to lift the 200,000 vehicle cap on the current structure of the $7,500 tax credit in the US. So of course we know GM has passed that, we know Tesla has passed that, so no credits for those two companies. I believe Ford, Stellantis, Toyota all still working through them. However, asking for this extension, which seems like a very poor time to be asking this in the midst of the high inflation that we are seeing, and the high gas prices making electric vehicles that much more attractive. Doesn't really make any sense. Personally, my hope is that something like this would not be implemented. Seems like a poor use of money at this time. Seems like any fund should be directed towards increasing supply rather than trying to put the finger on demand for EVs. So we'll see, but I doubt that will bear much fruit for those automakers asking for that. And then we've got some good news here on SpaceX. So we had talked 2 weeks ago about how the FAA had pushed back the decision on the environmental review for orbital launch of Starship. We now have a decision today. There are still some things that need to be taken care of, but the FAA has determined that the proposed action would not result in significant environmental consequences. So it's not a full clearance for SpaceX to be able to do their orbital launch from Starbase, but it is a significant step in that direction. And SpaceX will just have to take care of a few things that are outlined in a very lengthy document here. I believe there's like 75 other stipulations that they have to meet, but this is a big step for them in that direction. So good to see. And that is where we'll wrap it up for today. Again, I'm really sorry that my voice was giving in and out. I'll just have to do some warm-ups next time, I guess. But thank you for listening. Make sure you are subscribed and sign up for notifications. You can also find me on Twitter at Tesla Podcast. and we'll see you tomorrow for the Tuesday, June 14th episode of Tesla Daily. Thank you.